We are back discussing Safaricom's half-year numbers. It announced a 6% decline to the profit after tax, recording earnings of 33 billion. We have been discussing what led to this. First things was the drop in M-Pesa contribution to the top line. Second thing that we are looking at is the expenses. Tracy Kivunyu-Mose, who is a senior associate when it comes to the telecoms analysis team at Telema, has been having a discourse with us in terms of what happened. We've got it to the point where she says revenues are down, the incidence of loss of revenue from voice could continue. M-Pesa, the upside could come from a reversal of the government regulations in as far as not charging for transactions over 1,000 and less. Tracy, however, does like the efficiency that this company is running. Let us see what else does Tracy like. Tracy, now you've taken us to the expenditure. You've also given us a very good overview when it comes to the business model going forward, as well as touch points when it comes to regional markets. So today we have a company that lost 6%. What should we expect for the second half of the year? And in not so many words, maybe for the next 2-3 years, how should we look at Safaricom when we are looking at the earnings outlook? Over to you, Tracy.
Thank you, Peter. So earnings outlook, first we can start with what management has given us guidance. And we get guidance on two aspects, which is on CapEx at 35 to 38 billion, which is within what we've even seen before. But for the EBIT guidance, earnings before interest and tax guidance for the full year, we have a 7.5 to 10.5 decline expected by management. Seeing that we already did 10.5% decline in the first half, and that we are seeing a return to economic activity in what we call the second half of Safaricom's financial year from October to March 2021, I would think that somewhere close to 7.5% EBIT, and that is earnings before interest and tax decline, is what I would be thinking about. I would expect a slight recovery in M-Pesa because I am factoring in the return to transaction charges in January, so there will be that last quarter. But otherwise, would expect revenue to still remain weak. Would expect earnings also to be reported on a decline, because it's very difficult for us to say that Safaricom will be able to turn around a decline of 6% in the first half to a growth in profitability in the second half, seeing that economic activity is still not growing at the pace that it was before COVID came to us. So I am now thinking of a slight decline in profitability, while before I was looking at a flat performance. So it's still it will be a disappointing performance just because of how bad the first half was.
Okay, so disappointing performance for this full financial year. I know one of the key drivers for investors when you're looking at Safaricom, there's the guidance that management gives in terms of an 80% dividend payout. So if it declines, it means that the dividend won't be 1.4 shillings, which is what you got last year. So the question to you, Tracy, is if I'm looking at this stock for dividends for the next 1 to 3 years, what possible dividend could I get? Because last year the earnings per share, the headline earnings per share were 1.78, which translated to a dividend per share of 1.4. Now from 1.78, it looks like it could probably be minus 5% thereabout, which means there could be a resultant decline in the dividend. Question is, what happens a year after that, 2 years after that? Because anytime you're buying a stock, especially Safaricom or any other stock, you're not buying it for today, you're buying it for the future. How can we look at that perspective? Tracy, over to you.
Right. Management has, or rather Safaricom has a steady policy of paying 80% of its profits as dividends. So that means that any fluctuation in profitability directly affects what dividend is going to be paid. I would not expect Safaricom to reduce that. I would expect them to still continue maintaining that 80% payout, only that because of the decline in profitability, the actual value of the dividend is going to decline. That said, the issues that we are seeing with Safaricom's performance are not a factor of the company itself, but rather the environment it's operating in. And as the business activity improves in Kenya, Safaricom stands to be one of the greatest beneficiaries of that.
Okay.
So rather than looking at the decline that we'll probably see when Safaricom reports its full year numbers and pays its dividend next year, what we should be looking at is the return to growth. Now that we are seeing indications that there could be a vaccine next year, there could be even stronger business activity, maybe even back to where we were in 2019. And so that is what I would want investors to focus on more.
Okay.
The opportunity for growth Safaricom is offering, and the fact that its ability to pay its cash dividends has not changed. This is not a company that you expect to struggle to honor its commitments. And for that reason, looking at the opportunities and the stability of its financials, then it's a company to watch out for and to buy as it goes low and wait for the opportunity to now materialize in the performance in the years to come.
Ah, fantastic. I like that overview. So today it's trading at about 31. Last week it went up to 31.30. Now it's at about 31 shillings. There's a bit of demand yesterday at the 30 shilling mark. So is it fairly valued? What would be a good entry point? What would be a good exit point for an investor? Over to you, Tracy.
Okay. Looking at the metrics right now, I would say that it's fairly valued. The thing is, the opportunity is going to take some time to materialize, because I said there are many factors that we have to consider. Will regulations become favorable again for Safaricom in terms of charging for M-Pesa? And second, will the opportunity for Ethiopia come around sooner rather than later? And third, will the rebound in economic activity be seen just as strongly as we saw in 2019? With these three factors, then it means you could see now a rating in the price of Safaricom. But it's where we stand is that we might see Safaricom being very sticky, or rather the share price being quite stable at that 30 shillings level, as investors take a wait and see approach to see how those opportunities materialize. So I would say it's fairly valued. I don't think it's expensive at this price, but in terms of the time it will take for further upside in that share price currently, it will be subject to the three factors I have just mentioned.
Okay, so I have 1.5 questions to ask you, because now if I'm looking at it as an investor, I hear you saying that the upside for Safaricom is extrinsic to it. So it sounds like there are a couple of what ifs. So in other words, can Safaricom in 5 years, and I know you don't have a crystal ball on how the market moves, but can Safaricom, based on what you're saying, the environment it is operating in, the challenges, the fact that you're saying it's sort of maturing in the Kenyan market, can it be a company that moves from 30 shillings to 60 shillings per share, which is the trading price on the NSE? Or, in other words, can its headline earnings, which last year it reported 1.78, expected decline this year, can this double? Can we get 5-7 years a company that has a earnings per share of 4 shillings per share and is possibly able to pay 3.2 shillings of that as a dividend, maybe in 5-7 years? Over to you, Tracy.
Wow, so that's quite the question. Well, before the impact of COVID, Safaricom was growing at around 13% per year in terms of earnings. So for it to double, I mean, it would take probably 7 years for you to see a doubling in EPS if we follow such a trajectory.
Okay.
But the things that we should consider is that there's some very big jumps that can happen should these opportunities materialize, biggest of which is Ethiopia, for example, which is very underpenetrated. There's a lot of room for growth there in traditionally high margin businesses such as voice, SMS and data, and even mobile money should they get approvals to roll it out in such a market. So yes, the opportunities for me are still there.
Okay.
I think Safaricom is more than capable of realizing these opportunities, but more importantly, right now, since it's a mature company and it already has the cash, it has what it takes to succeed. I'm seeing the things that are holding it back mostly are tied to the regulatory landscapes in what they're trying to do. As you've seen, these opportunities, for example, like for visa and for asset management, we still not received any approvals. The factor of reduced transaction charges is also a factor of regulation as well.
Okay.
So I would say the trigger point for any investor who is now looking at the potential growth for Safaricom is to closely monitor how regulations are going to pan out over the next period. The next 5 to 7 year period. In the past, we've seen regulators being largely friendly to Safaricom's growth, and it's been an enabling environment. But right now, unfortunately, it's going to be a wait and see.
Okay, fantastic. I can't add anything more to that. So Tracy, I'll just ask you to leave us with a parting shot when it comes to Safaricom, and we can end our interview there. Over to you for your last words, Tracy.
Thank you. So overall, Safaricom has been resilient in the face of a very difficult economic landscape. We're happy with how OPEX management was witnessed in the numbers. We've seen also cash flows. As much as the decline, we've actually seen steady cash flow management, and we still think Safaricom is a strong stock to follow. Regulatory issues are still going to be a huge factor to follow in the next 5 to 7 years, but the capabilities for Safaricom's management and innovation capacity still makes us see it as a favorable stock to watch for any investor looking at Kenya over the next 5 to 7 years.
Oh, fantastic. Thank you so much. That was Mrs. Tracy Kivunyu Mose, who is a senior telecoms analyst at Telema. She was unpacking the half-year numbers for Safaricom that declined 6%. Tracy says 6% is possibly a one-off, but it is a resilient company that has been able to weather this storm, and what stands between it and enhanced profitability are actually factors that are extrinsic to it. If the Kenyan economy improves in the medium term, which in one way or the other it will or is expected to, then Safaricom remains one of your most favorable companies when it comes to the NSE. At this current price of about 30 to 31, it is fairly valued, but there is an opportunity to pick it up as it weakens. Traditionally, the NSE tends to weaken towards the end of the year. November, December is a quiet time, so there could be an opportunity there for you to pick up a bit of Safaricom on price weakness for the long term. That's all we had for you from here at Markets Today. Thank you so much for your time, and we hope to see you again tomorrow. But more importantly, on Friday, we take it down a notch and we just break down who is Safaricom, what is happening, so that you can be able to understand. So send us your questions in advance as we prepare for Ask Mbithe, and we want to just talk to you one-on-one. Safaricom ni nini imefanyika, unataka kujua nini, ndio tukusaidie kuweza kupata hisa za Safaricom uweze kujijenga into the future. So we look forward to having that conversation then. Thanks for all your time today. See you same time tomorrow. Good afternoon.